when you figure out how to work with BlackRock, you can probably work with anybody else. And then eventually in March this year, we basically unveiled the project. A couple of things. One is the tokenized money market fund that we've launched, which has very quickly become the largest in the world ever, the fastest growing, etc. So it's a huge success.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and with me is Carlos Domingo, who's the co-founder and CEO at Securitize. Carlos, great to have you on.
Thanks, Tommy, for having me here. Very, very glad to be here with you guys.
Yeah, Carlos, I'm really excited to speak with you. Tokenization has been on the adoption of tokenization has been on the rise, and Securitize is, I think, leading that charge. And I've known of Securitize since back in 2018. So I'm really excited to have you on, and I have a lot of questions for you. But let's start with your background. Where are you from, and what's your professional background?
I'm originally from Barcelona, from Spain. And that's where I was born and raised and lived until I was 21 years old. And my background is technology. I have a PhD in computer science. But then I also started involved in the kind of like the intersection of business and technology most of my career. So
I also noticed you authored 2 books. Tell us about that.
I did. So the first book was many years ago. It's probably more than 10 years ago. At that time, I was the head of R&D and innovation for a company called Telefonica, which is a very large telecommunications company. And I got really into, I try to understand why some companies innovate and some others don't, because telcos are not particularly famous for being innovative. And then I wrote a book called The Journey of Innovation, which is kind of like a compendium of all the different innovation technologies that companies use depending on the stage where they are to do, discovery and then commercialization, etc. Which is basically a summary of, I don't know, like 10 or 15 books on innovation that I really like, that they are explained as a journey through the whole process of innovation from like the research until commercialization. That was the first one. And then the second one was in 2016 when I discovered crypto. I got fascinated about it, and there were very few books about crypto at that time. Now there's like a million, but 2016 was very early days. And in particular, there was none in Spanish language. There were very few that were English books that were translated into Spanish. So I approached the editor of my previous book, which sold quite well. And I told him, like, why don't I grab a book about crypto? So I wrote it in 2017. It got published in 2017 before the first bull run. So it's very interesting because I was kind of like pitching crypto and Bitcoin, and there was not a lot of things like DeFi, NFTs. None of those things existed back then. Right. And I remember like how skeptical people were about crypto when I was like doing the tour book, selling the book in Spain, etc. People didn't understand anything about it. They didn't know anything about it. They didn't think it's like a real thing. So it was very interesting, and it also helped me kind of get deeper into the space because I had to do a lot of research about the first, let's say, 10 years of crypto since Bitcoin started until 2017 when it got published.
Now, you mentioned you discovered crypto or Bitcoin in 2016. How did you learn about it? Did a friend tell you about it? Did you read about it on a forum?
That's interesting. So 2014, even earlier, 2013, 14, that's the first time I heard about Bitcoin. When I was at Telefonica, because I was managing R&D and innovation, we used to do something called the Disruptive Council, where we will invite people to tell us about disruptive new things happening in the world to stay up with the trends. And then there was a guy from Silicon Valley, Jeff Clavier, who came and talked to us about Bitcoin. And I didn't pay much attention, just to be fair with like a lot of people heard from him and got into it. Like I was like, what is this? Like I didn't give much importance. And then he started telling us the year after about blockchain as opposed to crypto, Bitcoin, how that was like shifting on the Silicon Valley. That's when a lot of these blockchain, enterprise blockchain companies came up in 2015, 16. But really, when I got like the bag and I got really into the space was in 2016. That's when Ethereum launched. And then I heard from a friend that did one of the first ICOs, that he was launching a token, the basic attention token from Brave. And that's when I really got into the space and started like investing in ICOs, learning the technology, and then decided to basically launch a tokenized fund first, and then Securitize.
That friend, was that Brendan Ike?
That's Brendan Ike, yeah.
Yeah.
So Brendan was the CTO of Firefox, and then became the CEO for a short period of time. And at that time, I was working in telecommunications, so we did a project together to build a mobile operating system based on HTML5. We wanted to use web technologies as the front end for a mobile phone. So Brendan and I, spent a lot of time together. This was really pre-crypto. And then he pivoted to crypto very early on, like even before Ethereum launched. He had the idea about the browser with a wallet to be able to pay for your attention and receive rewards. And it started with Bitcoin, but it didn't work because Bitcoin is not suitable for that. And then when Ethereum launched and he could create his own, let's say, currency for doing that process, that's when the project really took off. So,
yeah, I had Brian on the podcast years ago, and I think he's also the co-creator of JavaScript, if I'm not mistaken.
Yeah, he's one of the smartest person I've ever met.
Yeah,
he's a legend in Silicon Valley.
It's amazing, and you're both here building in Web3, so
there's a lot of people. If you think about it, I saw that you had Mike Belch recently from BitGo. He also comes from Web2 and did a lot of work. He was actually in Netscape and then Google. If you look at Jeremy Allaire, so I knew who he was way before crypto because he was doing web streaming when I was in telco. So there's a lot of especially people of our age, which are like kind of like the older generation of the crypto people. We all come from Web2 technology backgrounds and got into crypto later.
Yeah, it's fascinating. I was thinking about that not too long ago, about the number of entrepreneurs and builders who were in Web 1.0 and Web 2, and now they're here in Web 3. And it's fascinating. And I tried to share that as an example to people who still don't understand crypto. Like, this is the next layer on top of the internet. And the folks who were at Netscape and Mark Andreessen and all these guys, they're here building.
Correct, because it's if you think about what was missing on the first internet layer, there were two things, right? One was a way to transfer value, because you could transfer voice, communication, messaging, content, etc. But there was not a layer that allowed you to transfer value. And if you think about the internet is a decentralized network, right? Like it was designed to be decentralized by DARPA, the Department of Defense Agency, precisely to be a network that is very resilient, right? That it cannot go down in case of an attack. So if you think about what a blockchain is, it's just basically a decentralized network that is very resilient, right? And it's cryptographically secure, so you can use it to transfer things that represent value. And that's kind of like the missing layer on top of the internet. I think the other interesting thing of how crypto has developed as opposed to the internet is how people are monetizing the protocol as opposed to in the internet, that the application layer accrue all the value. So the Facebooks and the Googles of the world, as opposed in crypto where the infrastructure layer, because of the ability to issue a token, then they accrue a lot of value. But yeah, it's a lot of similarities.
Yeah, for sure. So do you feel that model is now flipped on its head? To your point, Facebook collects all the monetization benefits, right? But the users, they don't get anything unless you buy the stock. But rather, now you can be kind of an equity holder by having the token. You can have governance say and on the network and have more skin in the game versus Facebook is just monetizing your activity.
We shouldn't say equity holder, otherwise the SEC is going to come and say those tokens are securities.
Yeah, that's
but
right.
they are to some extent. I know this is a very controversial argument, but I agree with you. Like at the end of the day, they give you economic exposure on the success of the project, right? Which is what securities are anyway. So that's why there's this controversy about whether these tokens are securities or not. But yeah, I agree with you that they give you an option to participate, and this is why there is this huge retail following in crypto that maybe was not existing in other industries because of the ability to participate and get upside if a project does well.
Yeah, I need to rephrase or update my verbiage. I shouldn't say equity, but you get to participate. And
correct. But by the way, this is the whole controversy about whether tokens are securities or not, because you do actually get a commercial benefit out of it, right? So arguably that's what securities are supposed to be, or investment contracts. And there's another argument that they're not because of other reasons. So, but yeah, that's precisely the conundrum there.
For sure. So let's talk about Securitize. Tell us about Securitize. How did the idea come about to start this company and what you guys do?
It came out of the ICO time. So when ICOs started to happen, and I remember that time it was Brave, it was Aragon, who's this decentralized governance thing that I also knew the founder. Who else? It was Bancor, which was kind of like the predecessor of Uniswap, and there was like many of these ICOs that I was, fascinated about the products, but at the same time being able to participate, as you said, in the product, right? As an investor, being able to invest and receive something that will represent, so will correlate, let's say, in value with the success of the project. So, and I, because I come from tech, I've always been investing on startups, investing back with the Web 1.0. The companies went public very early, so it was very easy to invest in public stocks, but then that kind of disappeared. So it was almost impossible to invest on the stock of a company unless you invest when they're private, or you had to invest on VCs. And then those processes of investing on private shares, whether private shares or VCs, are very cumbersome. It's very difficult to do the investment. And then they're very illiquid. So you don't know when you don't have a market to sell them, right? Mm-hmm. So kind of Web 1.0 IPOs were super early, so that kind of solved that problem, make it easy to invest and make them liquid. Then Web 2, that disappeared. And then Web 3, that kind of came back with the token, right? Make it very easy to invest and make it liquid, because a lot of these tokens were liquid right after. And they had projects like Bancor, which we look at it very, very closely at the beginning. As I mentioned, is the predecessor of Uniswap in terms of automated market making that could create liquidity automatically, right, without a centralized exchange. So I thought it was fascinating. And then my observation was very naive, thinking, why not apply this to securities, right? So you have equity, you have LP interest of VCs, etc. Those are things that are difficult to invest and that are illiquid. So if you could take this technology and apply it there, then you can open up a huge market. What I didn't know, because my background is not legal or regulation or finance, is how complex the whole regulatory environment of doing that legally is, right? Of course, a lot of people did it illegally. We, from the beginning, wanted to do it legally, but the whole idea was to apply the ICO model to securities. Mm-hmm. And then, of course, as I mentioned, we were very naive, thinking this is a technology problem, and didn't realize it's not just a technology problem, it's a regulatory problem. So I think that this is one of the reasons why in the 2018 times when you guys met us for the first time, things didn't take off, right? Because of all the regulatory complexity, licenses that you need to do things in a legal way, etc. But that was kind of like the genesis of Securitize, right? Take the ICO model and try to apply it as closely as possible to things that are regulated.
And that has evolved to tokenization and the ability to tokenize many different things. So I love to get your outlook on tokenization. There's things I've thought of, like, okay, if athletes tokenize themselves or their contracts, or I as an entrepreneur tokenize myself, what is your outlook? And let's cover like the full gambit, whether it's my house, myself, or BlackRock building and tokenizing a fund and things like that.
So first, tokenization is exactly what we did at the beginning, right? So when I say securities, if you think about the process of tokenization, is basically you take an asset, whatever the asset is. It could be treasuries, it could be the contract of an athlete that you mentioned. We actually did a project with an NBA player about that with Stephen Dinwiddie many years ago. Then it could be, a building, it could be whatever. For the most part, like, you issue a token that gives you an economic interest in the underlying asset, and that token is either a security, or you have to securitize the asset through a traditional securitization process, which is basically put it in some sort of legal wrapper and then give fractional ownership to this, right? That's what we call securitize, by the way. Like, most people don't understand why we call securitize, because tokenization is basically securitization on steroids, because it's like a very good way to do it. So tokenization is what we've been doing since the beginning. I think that the problem is that, obviously we've learned this over the years, is that you think that this applies to anything, right? You could tokenize, because theoretically you could tokenize anything you want, and there's all these people over the years been saying, everything will be tokenized, all the assets in the world, all the real estate, all the contracts of the athletes and things like that. And the reality is that, the token itself, tokenization itself, doesn't necessarily add value unless there's other things that come along, right? That you make it easier to purchase, which sometimes is a regulatory problem, not necessarily a technology problem. You make it somewhat liquid. The token does something that the non-tokenized version doesn't do, which makes it more valuable, like, easier to trade or to move around peer-to-peer, etc. And a lot of these early tokenization projects were not doing anything. You're just basically putting a token on the blockchain and that's it. So I think that's why it didn't take off. My view today is a bit different. I think that all these long tail tokenization projects, like let's say tokenizing the contract of an NBA athlete, will happen, but will happen much farther down the road. And I think that today, if you think about what has really taken off, is tokenization of dollars, right? That's the stablecoins. And then the next thing, which is adjacent to it, that is taking off now, is tokenization of treasuries, right? Because these are like dollars, but with a yield, but almost as safe as the dollar. And then you're just going to trickle down that way, right? Like treasuries will continue growing, and then you will have things adjacent to treasuries. Could be commercial paper, could be other yield, private credit, etc. And then eventually you will get to this long tail of tokenized assets that will be tradable and will be very efficient. But I think we're still far away from that situation.
Now, with regards to BlackRock, you guys have a partnership with the BUIDL in creating the BUIDL fund, which just hit $500 million milestone. Tell us about how that partnership came about and the fund and how the performance so far.
So we've talked to BlackRock since I think 2019 when Roy Mitnick joined the company.
Wow.
He's the head of digital asset now. And then we've been on and off talking to them about, things that we could do together until around a year and a half ago. And this is when Larry Fink more publicly was saying that, tokenization was the future of asset management because he saw this as a very efficient way of managing assets and provided more efficiency, etc. And then we kind of restart the conversations with them about doing something together. And then, of course, we work with them behind the scenes for a long time. Getting to work with BlackRock was probably a bigger challenge than we expected initially in terms of complying with all their, regulatory compliance. It's a very big asset manager and is very strict in some things, which, is a good thing, right? Because when you figure out how to work with BlackRock, you can probably work with anybody else. And then eventually, in March this year, we basically unveiled the project. A couple of things. One is the tokenized money market fund that we've launched, which has very quickly become the largest in the world ever, the fastest growing, etc. So it's a huge success. And then the second thing was an strategic investment of BlackRock in our company, and then Joseph Shalom taking a board seat and continue working closely with them on enabling more functionality for BUIDL for the first because I think we're just scratching the surface, and then doing other projects in the future as well.
Now, I know some people who are new to crypto, blockchain, and tokenization are going to say, so what? So, okay, BlackRock tokenized. What are some of the benefits, I guess, the tangible benefits that maybe a newbie user can relate to? Is it faster? Is it 24/7 trading? What are some of the benefits?
So the benefits of tokenization depend on the asset, right? Some tokenized assets have this feature that makes them more useful, some others don't. But overall, what people need to understand is when you buy or when you issue securities, you need to represent the ownership somewhere. You need a ledger, right? So that's the premise. You need to have a ledger that where you represent the ownership of the asset. And then you could use any ledger, but blockchain happens to be a very good ledger that is publicly available, is decentralized, is cryptographically secure. And that has, if you think about the origin of blockchain is Bitcoin, right? Which was precisely a ledger designed to record ownership of an asset and being able to transfer the ownership of the asset in a decentralized way, in a very safe way, right? So the same thing applies to securities. Securities need to be represented somewhere. Today, many securities are represented in efficient ledgers, or in some cases they don't even have electronic ledgers. They'll have like paper ledgers, etc. And so that's one aspect of it. The other one is when you transact with securities, there is the security that moves, but it's also money that moves, right? Because you need to pay for it, or you need to redeem it against something, or you need to receive a dividend. So you need to have also a ledger that tracks the money. And then we happen to have the same ledger, a public blockchain that has a token that represents the security, and the same, technology layer represents dollars as well, which is stablecoins. So that allows you to do things in terms of moving money and security simultaneously in a super efficient way that is impossible to do in traditional markets. Like, most people don't realize, when you transact in traditional markets, things don't settle. Like, the transfer of the ownership and the money doesn't happen immediately. And that creates all sorts of problems, counterparty risk. It creates issues with, reserves that you need to have in case the price changes, etc. So all those things get eliminated on the blockchain. You just make it's a very efficient ledger that allows you to transact with securities and cash simultaneously in an extremely efficient way. And that makes it easier for those securities to then be used by people, right? Because like, if you have BUIDL, for instance, and you need cash because you need to liquidate your position, you just swap it by USDC on chain and you get a USDC 24/7 available. You want to do that in traditional markets, good luck with it, right? So you have to notify somebody to do it. You have to submit the redemption request. It will take them like, a day or two to do it. If you get caught up in the middle of the weekend, then it doesn't happen until Monday. If there's a holiday, it also doesn't happen, etc. Because nothing is automated, everything is manual, while these things are all like digitized on the same ledger and everything is automated. So.
And do you feel that will open up secondary and tertiary markets, especially both for retail and institutions? I know the retail tokenization aspect is still way off, but let's say people decide to tokenize some sort of rare artwork they have, or a rare car, or whatever it may be. What type of secondary and tertiary market do you think might open up?
The first thing I want to say is that, there is this misperception that tokenization makes the asset more liquid. And it's actually not really true, right? So what tokenization does, it makes the asset easier to trade and easier to transfer, okay? And of course, to have liquidity, you have to transfer the asset, right? So one thing is a prerequisite for the other one. But the fact that tokenization makes it very easy to move the asset is not necessarily makes that the asset is going to be liquid just for the fact of being tokenized. And I think this has been something that the industry has got wrong over the years, and that's why you've seen all these, rare art tokenization that you just mentioned, that people think, you have this Picasso. And by the way, I also thought that this was going to happen many years ago. I just, over the time, I realized it's not as simple. But, you think that I'm going to tokenize a Picasso, and because, I have a very efficient way of providing fractional ownership and moving and transferring the ownership of these fractions of the paint, then the paint becomes liquid. But you still need to have that market that wants to buy and sell the asset, right? And then I think that for these long tail assets, those markets are still not there. So today, if somebody comes to us and says, we want to tokenize a rare asset, like a rare paint, we will license the technology if they want to, but we'll not get involved, because the most likely probability is that this is not going to be a successful project. So I think that we need to, as I mentioned, go from the most liquid assets, which are dollars and next treasuries, all the way down, building all the infrastructure, not just for making the asset easy to trade, but also to have liquidity and have enough market participants. So that goes along with bringing retail into the mix, which today, most of the tokenization projects, we do have some retail projects, and we've done retail projects in the past, but there's still a regulatory friction to do it, right? That has nothing to do with the technology. I think that will get eliminated over time, and we'll get a simple way of retail to participate in tokenization projects, the same way that they buy Apple shares or Tesla shares today, and it's not a problem.
You kind of touched a bit on this earlier, but let's say an entrepreneur, let's say Elon Musk, right, was to tokenize himself, and this is like maybe 10 years from now. But someone of that caliber, well-known, they see his vision, they see his success and the companies he's built. Do you think people will do that? And could it be that also new entrepreneurs can say, here's my idea, I'm going to tokenize myself, and you share in my, I don't know, earnings, whatever it may be, over time? Do you think that might be a scenario that appears?
That's interesting. So, I mean, if Elon Musk today issues a token that gives you any access to his future earnings, that's going to be a massive success, right? Because obviously, this guy's like the most successful entrepreneur ever in history, if you think about all the stuff he's done. So people will bet on him being successful in the future, and therefore they will want that, right? Why Elon Musk will want to do that or not, that's a different story, because he doesn't need to do that.
Right.
But along those lines, we did this project, as I mentioned, with Spencer Dinwiddie, where he basically tokenized the future earnings of his contract. So you could actually buy a token that will give you an interest based on the future earnings he was making on the contracts. And it was a very interesting project. It became very controversial. The NBA didn't like it. It went through all sort of regulatory and legal problems and ended up launching, but with limited success. So I think those are super interesting ideas. There's been also same concept around tokenizing, royalty streams for music, for artists, which is kind of similar idea of, okay, I'm an artist, I need money to produce my music. I tokenize myself in exchange of my future earnings of the royalties of the music that I produce. And then you can, fund my business, right? So it's kind of like crowdfunding the person, if you want, to some extent, right? Yeah. Which is a very interesting concept. I think eventually these things will happen, but I still think that we need to create a lot more infrastructure, demand, and simplicity to be able to participate for these things to really take off.
Now, we talked about tokenization of money, stable coins, and then treasuries, and what BlackRock's doing with their fund and so forth. What do you think is going to be the next wave? Will it be real estate, as maybe that's a bit more liquid and that's a very prominent asset class people are familiar with? Everybody understands you need shelter, but if a building in New York City is tokenized, I might invest in that because I know the value goes up over time.
I don't know. I'm a bit skeptic of the real estate tokenization, and I've been doing a lot of those projects over the years. Maybe perhaps that's why I'm a bit skeptic. First, real estate is a very broad term, right? So you could have, a Blackstone real estate fund that contains hundreds of properties. They're very diversified, actively managed, paying dividends, etc. I do see those things eventually becoming tokenized, because why not? Those are like funds that are semi-liquid, etc. All the way to like an individual property. Let's say we were part of this crazy project many years ago about trying to tokenize the Plaza Hotel in New York when it was being sold. So those are like the two streams, right? Like you have a very diversified portfolio of things in a fund format that is real estate, and is huge, and you have like an individual property. I think that those individual tokenization projects, they'll still, take time to get tokenized successfully, because first, you need to find the demand, and second, you need to find the liquidity, right? And when it's a small property, you'll have a small amount of, holders of the token. And then because you have a small amount of holders of the token, then you will not have a lot of liquidity by definition, right? So I think, on the other hand, if you think about what's in between, let's say real estate and treasuries, there's a bunch of things in between, right?
Right.
There's private credit, there's CLOs, there is commercial paper, there is debt, like bonds, etc., which are probably more suitable for tokenization as a way to add. Treasuries are going to go down in value, the yield, right? Because interest rates are coming down. Hopefully this year, they will do the first cut, right? At that point in time, people will look for what's the adjacent in terms of risk. So it's a little bit riskier, but a little bit higher yield to start compensating from the yield that you're losing from holding treasuries. So.
And do you also feel that, look, the market is not conditioned, people are not conditioned to understand it. First, they have to understand it, right? And then they have to recognize that, hey, there's a safe market out there to do these things where other assets can be tokenized. So maybe we're 10 years away from now. Maybe it's my daughter who's going to be more into, I'm going to buy, part of the Empire State Building or something like that.
The problem of these things is that, you need to have a very trustworthy marketplace where you know what you're buying at what price, right? Because, if they tell me, oh, you can buy a piece of the Empire State Building, on one side I will think this is very cool, because why not? Like, the Empire State Building probably never going to go down in value, but at the same time, I wouldn't know how to value, whether I'm buying something at a fair price or not, right? Because I have no idea about real estate. Right. And analyzing, the cash flow of a property, the actual value, the potential value in the future. This is a very complicated thing that only very few people know how to do, right? So I think that, being able to get enough retail demand for these things will require, marketplaces where people trust that there is a price setting in a fair way for people to participate. And I don't think we have that there yet.
Yeah, for sure. Now let's talk about the blockchains you're using to do this. Obviously, BlackRock, tokenize on Ethereum. Are you mainly using Ethereum, or are there other blockchains that you're testing as well?
So we started with Ethereum. That's where everybody started in the industry when we started, because there was nothing else. So in
Sure.
2016, 2017, over time, we kind of recognized that the world is probably multi-chain, and we're going to have multiple chains, and therefore we needed to support different chains. So what we did is basically create an abstraction layer for our platform so we can talk to different chains, and then started supporting all the chains. We did some work in the past with Algorand. So the Exodus token for the Exodus wallet was done in Algorand. Then after that, we've supported Avalanche, Polygon, XDC more recently, and then we're now working with other blockchains to be able to support them as well, and be able to issue the same assets that we have on Ethereum on multiple chains, right? And that's kind of like phase one, which is what we're going to be doing from now till the end of the year. So you're going to see more blockchains coming live in our platform soon, the major ones you can think of. And then now the second thing that we're also looking at is working with not have supporting multiple blockchains, but being able to bridge the same token across multiple blockchains. That has different implications in terms of how to do it, and also how to control the compliance of the token, because our tokens are securities, but that's ultimately what we want to do.
Yeah, that's exciting. I think you answered my next question. I was going to ask about interoperability. Like, can I move a token from Ethereum over to Avalanche?
You will be able to do it at some point in the future.
Yeah.
In the near future. We're not talking about years. We're talking about months.
Oh, awesome. I know this is probably under wraps. Anything you can share about what BlackRock's next tokenization project might be?
No, I cannot speak on behalf of BlackRock first. Like, BlackRock is BlackRock, and I'm Securitize. I can tell you what we want to do from Securitize perspective. I think that, as I mentioned, first, I think BUIDL is just scratching the surface. So if you think about, stable coins, if you think about crypto, is like around $2.5 trillion, right? And then you have $150 billion on stable coins. The first thing I think is going to happen is like, first, crypto is going to continue growing, but the stable coins will grow faster, because it's probably one of the assets that has the most product market fit of entire crypto, right? So it's only natural that stable coins grow faster. So if crypto goes from 2 trillion to, I don't know, 10 trillion, stable coins are going to go from 150 billion to 2 trillion, because they will grow faster, right? So that's the thing. Now, the second thing is, what's adjacent to stable coins is treasuries. And today you have $150 billion stable coins and only $2 billion in treasury. That makes no sense. You should have a much bigger percentage of the stablecoin market that is in treasuries, because in traditional markets, actually the opposite. You have $2 of treasuries per each dollar of actual cash. Right. So, of course, crypto is a bit different, because stablecoins are permissionless and treasuries are permissioned because of securities. So I think it will be the reverse. But the fact that is only 2 billion out of 150 billion makes no sense. And the only reason that is happening is because there hasn't been anybody pushing that market until we came in with BlackRock, and now everybody's like rushing to grow this market. So I think treasuries will still have a massive amount of growth in front of us. And then I'm always a big believer of focus and not doing way too many things at the same time, even though sometimes we end up doing too many things. But if we can grow BUIDL from $500 million that is now to a few $1 billion or more, that by itself is a really good business. And then, as I mentioned, I'm exploring what's adjacent to it, right? What are the things that are adjacent to it that they will have demand in the next 12 to 18 months as the yield of stable coins of treasury, starts trickling down, right? We already have a credit product with Hamilton Lane Scope, which is very good. It yields on average, 8 to 12%, depending on the month. It's private credit. It's managed by Hamilton Lane, which is $1 trillion asset managers. Is very safe, as opposed to a lot of the tokenized credit that we have in the crypto market. So So I think those asset classes are very interesting for us in terms of launching more projects.
What do you think about tokenized gold? Because as you're saying that, I thought of why not gold? I've heard different people working on things like this, but what are your thoughts on that?
I think that I was talking to a friend this weekend about that. We don't do commodities, so tokenized gold is a commodity, and we do securities because that's where we have strength and moat, because we have the licenses and the experience how to do it. Securities are much more complex than commodities. I think there's an argument that because tokenized commodities or gold or oil or whatever could trade in different venues and different times than the actual gold, that this has value, right? Because, I think recently the Paxos tokenized gold, I think it was just trading at a completely different price than the actual gold.
Right.
And the reason was because there was demand during the weekend and people could buy Paxos tokenized gold, but they couldn't buy normal gold ETF, let's say. So, and that created a dislocation in the market, which I think is interesting for people doing arbitrage, right? So I also think that commodities, maybe the tokenization process is not necessarily the same. Like you can do perps. I think it's a company called Calidora that is doing that, creating perps on the price, because people sometimes they would just want to speculate on the price. They don't want to actually own the asset. So that's something else that on securities is a bit more complicated, especially more illiquid securities. So that might happen there. But yeah, I think it's very interesting. I think, those are just very different problems, but both of them are equally interesting. Yeah.
On the note of that situation with gold, where the actual gold market is closed, so to speak, for the weekend, but the tokenized can still be purchased. When do you think we see the full 24/7 trading of securities and commodities on the blockchain? What's your timeline window where there's no opening or closing bell?
Well, first, what people need to understand is that there's no reason why the New York Stock Exchange doesn't open 24/7. There's no regulatory reason. It's more like a tradition that the traders will trade in the morning and then will go up, stop working at some point, and then the venue closes. But there's more and more liquidity outside trading hours. And then some brokers like Robinhood, they enable 24/7 trading for a lot of stocks already. So I do think that you will see like national market stocks trading 24/7 on traditional exchanges before they happen on the tokenized space. Because also, if you think about most of the tokenization projects, they tend to focus on private markets, because national market securities, let's say like an Apple share or a Tesla share, have their own regulatory restrictions in terms of how you trade them, that the tokenized version of it is complicated to do from a regulatory perspective. So I think that those markets might not be the most suitable ones to go with tokenization. And I think the 24/7 will take care by itself with traditional markets. I think this is more interesting to tokenize anything else that is actually not available and not tradable and not in any venue, right? So
Yeah, definitely makes sense. I'm excited for that feature though, where the markets can be 24/7, and especially
Robinhood already, I'm a big fan of Robinhood, and I use that for my own personal trading. And there's a ton of stocks in Robinhood that are already 24/7.
And then, in addition to that, with tokenization, do you feel that it will open up assets to different countries and jurisdictions? For example, not everyone can access the New York Stock Exchange if you're in certain parts of the world, but maybe with tokenized securities and commodities, anyone can access those tokens.
That's a very interesting. So that part, I do think that if you can solve the regulatory challenge to do it legally, because when you create a token, and by the way, there's been some companies in the past in crypto that they've been trying to do this, and some of them were shut down by regulators. So I think that there is a path to do it, but it's not straightforward if you want to do it in a legal way, because even if you tokenize Tesla shares and sell them to the Philippines, you're still touching a US security. So the US regulators can still go after you, which actually happened in the past with some companies in the space. Don't need to mention anybody, but I do think that's an interesting value proposition, right? To
Yeah.
use this digital twin as a token that tracks the price of a stock to be able to offer it in other jurisdictions. I think that how to do it legally is where the tricky part is, but yeah, I think that will probably happen, sooner than later.
Let's talk about the crypto market at large. We talked about, your background in discovering Bitcoin circa 2014, then 2016 and so forth. what are your thoughts on how the industry has grown, the asset class has grown? We have Bitcoin ETFs, we have Ethereum ETFs. It's pretty amazing.
Look, I'm pretty happy that things are now growing in a much more stable way, and a lot of the craziness that happened the last few years is gone because the 2021 ramp up in crypto, in my opinion, was purely speculative for the most part. And in many cases by people committing fraud very openly, like, all these lending platforms like BlockFi, Celsius. Anybody that understands securities regulations knew that what they were doing was illegal and they didn't care. And I think that's not good for the industry, that you have these people trying to play regulatory arbitrage. And then you have FTX, which nobody knew they were doing something illegal. And it turned out that it was actually the biggest illegal thing. And then you have Terra Luna, and then you have, so many of those frauds. So I think that I'm pretty happy that a lot of these things are past, and whoever needs to be in jail is in jail. Whoever needs to go out bankrupt went bankrupt, and they're out, because these are bad actors that you don't want in the industry. And I think now people seem to be focusing on building real stuff. And I think this whole narrative of real world assets came right after this debacle that happened the last few years as a way to. It's a terrible name, by the way, but it does signify that the crypto people think this is real, as opposed to what was happening before, which was not real, right? Yeah. So I think that's interesting. But I still think that there's a lot of people in crypto that are there as pure another place where they can speculate, right? That they could care less about crypto. It's just a more inefficient market, so I might as well speculate here than speculate somewhere else that is a more either regulated or mature market. There's a lot of people that are like grifters that are like just in crypto because there is an opportunity to issue a token and make money or an NFT or whatever. Right. But there is a significant amount of people that are trying to build real stuff that actually has real utility, that solves real problems. And I think that portion, which used to be the minority, in my opinion, of crypto for the last 10 years, is kind of growing. And that will probably lead to real usages of crypto that solve real problems, which today, in my opinion, is what is lacking. So,
yeah. Yeah, absolutely. And I've been trying to highlight as much as possible, like the real world adoption. Like just yesterday, Avalanche, they announced that the state of California put a bunch of vehicle card titles, actually millions.
Yeah, we reposted that, even though it's not really nothing to do with us, but we thought it was a good example of somebody like Avalanche, which, by the way, they're really good friends, and I really appreciate what they do, of trying to build real stuff, right? Things that have real utility.
Absolutely. Now, you touched a bit on, securities laws and clarity, and in the United States, we're still waiting for comprehensive legislation, but there's been, Carlos, I mean, an amazing impact on politics. Crypto has had an impact on politics, where you have presidential candidates endorsing crypto. A market structure bill made it out of the House. We're waiting for it to go to the Senate. What are your thoughts on all this? And do you think we get clear regulations by next year?
It will all depend on where the elections go, obviously, because you have one candidate that obviously has been very vocal. I saw the speech he gave at the Bitcoin conference in Nashville this weekend. I was at home, but I watched it live, and I thought it was whoever wrote that speech knew exactly what it was the crypto community is waiting to hear.
Yeah.
So I thought it was very refreshing to see a presidential candidate actually speaking about these topics and supporting the industry. So I think if Donald Trump becomes the president, we'll probably see a much more favorable regime in the US. I don't think that things will change overnight, because these things need to be approved and they need to go. It will all depend also on, how the House and the Senate end up being configured and who has control over those things, because, as you know, things get approved in the House, but then they have to go to the Senate, and then they go to the president. So getting things approved in the US is not a simple thing. We'll see a much more friendly SEC and much more responsive. As you might know, I was actually an expert witness in Congress about tokenization. What we do shouldn't be controversial. Should be something that both parties should support, but unfortunately it doesn't seem to be the case, and that's pretty sad, because if our stuff on tokenization is controversial, I can't even think about FIT 21 or stablecoin bills or things like that. But I do think that eventually this is a $2.5 trillion industry that is growing and that is here to stay. So somehow we need to have regulatory clarity and laws that regulate what happens, because otherwise, people can get hurt, right? So we've seen this with a lot of the issues in the past of the lack of regulation has not led to stop frauds. So.
Yeah, great point. All right, I got some wrap-up questions here for you, Carlos. First, if you could create your own metaverse, what would the theme be?
My own metaverse. I don't know. I'm a diver. I like diving. I've been diving for many, many years. And I think that being underwater, like when you're like deep, is the closest thing as being in a different planet.
Yeah.
So, but I know a lot of people don't dive because it's, they have claustrophobia or they're afraid about being there. So I will build the metaverse that you allow people to experiment what is to be underwater, like at a certain depth, and see all the beauty that the sea has to offer us that is not available to most people.
Yeah, I would love to have an immersive view of is it called the Mariana Trench? At the deepest part of the ocean, I believe it is.
Yeah, well, that would be amazing because that's even way deeper, right? But, even if you go, I have an advanced PADI, you can go like 30 or 40 meters, which is pretty deep already. And it's beautiful. It's so different. It's like you are in a different planet. So.
Yeah, there's so many unique ocean creatures and things like that. It's like rare fishes and all that.
Yeah.
It's incredible. Rapid fire questions. Favorite food?
Wow. So I'm Spanish. So obviously I love Spanish food. I think it's probably one of the best cuisines in the world. But I also lived for over 10 years in Japan, which is probably the closest thing to the best food in the world compared to the Spanish one. So I'll have to take both in this case, Spanish and Japanese food.
Favorite musician or band?
Probably David Bowie.
Favorite movie?
Blade Runner.
Oh, yeah, that's great. Favorite book?
Oh, wow. So I don't read novels. So that's just a premise. So I don't read novels. I only read essays or business books. So within that context, I think probably one of my favorite books, and I actually met the author before he passed away many years ago, is The Innovator's Dilemma from Clayton Christensen. So this is a very really good book about why innovation happens and it doesn't happen. And Clayton was a very articulated person that was a professor and that built his own consulting practice after. So I think that's one of my favorite books.
Yeah, you're the second person I've heard within the past month who recommended that book.
It's a very good book.
Yeah.
There's two good books in innovation, if I can have a second one. So The Innovator's Dilemma is very good. But then there's one called Crossing the Chasm, which is very interesting as well. And perhaps Crossing the Chasm is more relevant for our industry. So Crossing the Chasm is a guy called Geoffrey Moore. He wrote the book. I think I wrote the introduction to the 25th anniversary edition in Spain like 5 or 6 years ago. So it's probably like 30 years old or something like that. But it talks about, the adoption cycle of technologies, like why some technologies seem that they're going to be adopted and they never get adopted, and some others that get adopted by everybody, and what it takes to like move them across the different population of people adopting technology. And it's very relevant for things like crypto, and most of startups founders should read that book because it's very interesting.
I'm definitely going to check that one out. So thank you for that recommendation. Carlos, absolute pleasure. And I love what you guys are doing at Securitize, and congrats on all the success. And I'm sure I'm going to have you back on in the future as things progress with BlackRock. And
definitely. Don't take another 5 years to bring us back.
For sure. Thank you, Carlos.
That was good, Tony. Thanks for the interview. I enjoyed it.